Although the market indexes are still in this big wedge type formation, you can see the bias is still in an upward direction, not quite up in the overbought condition, and the Dow today with its positive trading brought the trading back up above the T-line. The transportation index was up 143 points today, still coming up to the top of this channel a viable target. The fact that the transportation index was up 143 was a good indication that there isn't full-scale selling in this market. The current trend is still in progress. The positive trading in the NASDAQ is still producing the possibility of a breakout of this upper trend resistance level. If that's the case, that would imply that it's going to be a lot more upside based upon a breakout of a resistance level and a wedge formation. The lack of any selling in the markets reveal which charts are the strongest. Currently, the auto parts stores are trading strong ever since the break up through the T-line. Notice the bullish doji sandwich and the bounce off the 50-day moving average, making the next viable target possibly all the way up in this area. When you see numerous stocks in the same sector, again, the Dana Holding Company, another auto parts store, ever since the dojis, the gap up, breakout through the 50, also makes this area up here the next likely target. You can see how the breakout and the steady move since then has produced good consistent profits in the portfolio, even when the market was kind of whipsawing up and down over the last few days. So the visuals of a candlestick chart, such as your best friend bullish harami right off the 50, and another shipping stock, told you when to buy, and then you could see when it was time to take profits when you close back below the T-line. This isn't rocket science. This is simple analysis of what investor sentiment is doing based upon the signals, the sell signals in the overbought area or the buy signals in the oversold area. Tells you when to buy and when it's time to sell. Or inversely, like in the weed stocks, CGC showed you when it was time to sell and stay short until you see a buy signal and a close back up above the T-line. Simple patterns, such as in Apple, producing a little slow curve, positive trading today, still indicates that this uptrending channel is still your likely target, that you could be buying Apple up here, even though it's up in the overbought area. You can see how the consolidation now produced another buy signal, a left-right combo bouncing off the T-line, implying that they could be heading back up to the top of the channel. This allows the candlestick investor to put on appropriate trades. In this case, it might be buying a spread, buying the 245, selling the 250 over the next couple of weeks. Because we have such more clarity identifying what's happening in individual chart patterns and a trend, allows the candlestick investor to have a lot more opportunities, which allows the candlestick investor to make the most appropriate or high profit, low risk trades based upon knowing with a high probability the direction of a price move, and then watch to see what everybody else is watching as far as a target. And witnessing the pattern setups, we can see there's kind of a little resistance level right here on Facebook. But notice that even when Facebook sold off on Friday, it used the 50 as a support and it closed at the T-line. Today's positive trading was further indication that they weren't closing below the T-line and were getting ready for a bobble breakout, meaning If it comes back up through this resistance level, we can be buying with much more confidence that we're now in a wave 3 of this J-hook pattern. Because we know candlestick signals and patterns are the repeating effect of investor sentiment that has been consistent for the last 400 years and will probably be just as consistent in the next 400 years, that price moves can be much easily identified knowing what investor sentiment is doing based upon these signals and patterns. That'll be it. We'll see you in the chat rooms.